Bitcoin just hit its lowest price in 21 months. From a high above $110,000, it has bled all the way down to here. No crash headline, no single disaster, just a slow, relentless slide, and a chart that's now flashing red on every screen in crypto. So what's actually driving this? Let's break it down. Start with the big picture, one monthly candle. In May, Bitcoin closed near $73,000. By the end of June, around $58,000. That's a $15,000 drop in a single month, down more than 20%. One red candle, that erased months of gains. Now, here's why it happened. Three forces all pulling in the same direction. Force number one, the money is leaving. For most of this year, Bitcoin ETFs pulled cash in, those green bars. But look what happened recently. The bars flipped red. In a single stretch, over $737 million flowed out. And here's why that matters. When these funds bleed, they have to sell real Bitcoin to pay investors back. That's daily mechanical selling pressure, the exact opposite of the demand that fueled the last rally. Force number two, leverage. This is a liquidation heat map. The bright zones are where traders get wiped out. As price broke below 60,000, it slammed into a wall of over-leveraged longs. People betting Bitcoin would rise using borrowed money. And once those positions blow up, it feeds on itself. Price drops, longs get forced sold, that selling pushes price even lower, which wipes out the next batch, a cascade. The brutal lesson here, over-leveraged longs are easy targets. Force number three, and this is the one most people miss, this isn't really a Bitcoin story, it's a market story. Lay Bitcoin over the NASDAQ and they move almost in lockstep, a correlation of 0.82 over the last 6 months. So when tech stocks sell off, Bitcoin tends to follow. Right now, money is fleeing anything risky, and Bitcoin is the riskiest asset on the board. And there's a wild card. A $10 billion options expiry is landing right now. Around these big expiries, the market turns mechanical. Traders and market makers scramble to hedge, and price can swing hard in either direction. Pump or dump? The level to watch is called max pain. Bottom line, with this much money on the line, expiry day can spark major moves, so expect volatility. So where does it go from here? Let's give both sides, fairly. First, the bears, and right now, they're in control. Lower highs, lower lows. Weak momentum, negative sentiment. Real fear in the market. Bitcoin is trading below its major moving averages, and as long as the selling pressure holds, the path of least resistance is down. The bear takeaway? Stay cautious. But here's the other side, the bulls. Their argument? This is exactly the kind of extreme fear that has marked bottoms before, not tops. They're watching for the signals to flip. Higher highs and higher lows, momentum turning, sentiment recovering, liquidations drying up, and a clean breakout to confirm it. The coins are leaving exchanges. The long-term buyers aren't blinking. And when conviction is this low, that's often when the sharpest reversals begin. The bull takeaway? Stay opportunistic. So forget the predictions. Here's your watch list, the 3 things that actually matter. 1, key support levels. Watch whether Bitcoin holds or breaks down. 2, institutional flows. The day those ETF outflows flip back to inflows is the day the biggest seller leaves the building. And 3, macro events. Data releases and rate decisions are now moving Bitcoin as much as any crypto headline. Stay informed, stay patient, stay ready. So, is this the bottom or just the next leg down? Drop your call in the comments. I'm reading them. If this helped the chaos make sense, hit subscribe, like, and turn on notifications so you catch the move the moment it happens. And one important reminder, this is for information and education only. It is not financial advice. Always do your own research before risking a single dollar. I'll see you in the next one.